Once again, welcome to our Accounting Software Made Simple channel. I am Williams and I'll be taking you on this wonderful, interesting session. Okay, so quickly we'll be looking into accounting terms that is frequently used in an accounting software. It's very important in as much as you have been following up with our videos on our channel, and we believe you have subscribed to our channel. If you have not yet done that, please do. It's good to mention that there are terms that are frequently used, and we have found it to be a good one to expose these terms to you so you'll be well guided when working with these computerized accounting softwares. And number two, the purpose of today's video is also to put you through on how to make accounting entries or postings in an accounting software. Definitely you agree with me that there are transactions, there are need for transactions, and transactions are very important in every organization. It's important that you are able to capture transactions. Of course, the end point of that very capturing, it's the essence why reporting aspect has to be carried out. So stay tuned with us, flow with us as we look into this very interesting aspect where I will be guiding you on notable terms which you must put into consideration as far as you are working with these very softwares. So quickly let's look into them. So right here we have accounts, debit and credits, assets, liabilities, capital, income, expense. We have debtor. I believe you are all taking note of it. Creditor, inventory. I should come again. The 10 accounting terms which are frequently used in an accounting or computerized accounting software are accounts, debit and credit. I believe you can see it on my screen. Asset, liabilities. Sorry, you're asking if I will do the explanation. Yes, definitely I will give you a quick explanation on that, so don't worry. So capital, income, expense, debtor, creditor, inventory. So Shenwu, I believe you have taken note of it. Like I said, this class is being recorded, so you can always go through it on our channel. Okay, so for accounts, an account is a summarized record. I'm giving an explanation and trying to explain accounts for you to understand. When working with an accounting software or computerized accounting software, you need to take note of this word accounts. Now, accounts, like I said, is a summarized record of various transactions pertaining to a particular account head. In an accounting software, it is commonly referred to as a chart of accounts. While normally it is commonly referred to as a ledger account. So please take note of it. By the time we'll be practicing with either Sage, you'll get to see the list of accounts. And it's important because in previous classes we were saying that the maintenance of these accounts are very important because it forms the accounting process where you have to record, maintain, report these informations. So account is a notable word, so take note of that. For the debit and credit, the term debit and credit just refer to additions or subtractions from an account when you're adding or you're subtracting from an account. Now, debit is an accounting term. For those of you who don't have accounting background, debit is an accounting term. Take note of that. That word debit is an accounting term that means to owe, and it is used to describe a payment. It could also be used to describe a debt or an entry in recording a transaction, and the effect of which is to decrease a liability or income or capital account, or increase an asset or expense account. Now, credit, on the other hand, is the opposite of debit. It is an accounting term as well, but now in this very point, credit is used to describe an entry that increases an income, liability, or it could be capital account. And on the other hand, decreasing an expense or asset account. Sheon, I believe this is you got this very well. Good, thank you. Assets, which is the third. I'm sharing 10. Now, assets. Assets are resources owned by a business. I don't want to go more further. We have a definition of assets according to part of the ISB, the 5 elements of business. But take note of what assets are. They are just resources owned by a business, owned or controlled by a business. Now, it can be anything. When it comes to an accounting software, an asset can be anything that enables a business to get benefits. For example, land. Business will get benefit from it as far as it is the owner or it has control over that land. Building, stock of goods, cash, equipment, so on and so forth. Liabilities. A liability can be defined, or let me just simply say liability is something that a business owes to a business owes another party or another person in the form of an obligation that it will pay back. For example, let's say your business took a loan from a bank. Okay, are you with me? He said, for example, a loan is taken from a bank or a financial institution. Now, it raises a liability for the business. And that's just what I'm trying to point. So quickly on capital, it is the money that the owner invests to start the business and can claim from the business. Now, for the business, it is a liability towards the owner, since the owner is a separate entity from the business. And it can also be looked into as the positive difference of asset and liability. I don't want you to be confused. For income, income is money received by a person or organization because of effort or work done by the person. Okay, so we don't have much time. In other words, it could be return on work done, or it could also be ROI, that's return on investment as income. Now, expense is the amount spent in order to produce and sell the goods and services which produce the revenue. Debtor is a person or business consigned that owes money to another business. Creditor is a person or business which a business owes money. Inventory, we are referring to the goods lying unsold on a particular date, and the stock can be either opening stock or closing stock. An opening stock is just the stock lying unsold at the beginning of the accounting period, while closing stock refers to the stock lying unsold at the end of the accounting period. So this is how to do your postings. Thank you. Subscribe to the channel. God bless you.